Welcome back. The Nifty and the Sensex have hit a record high. The Nifty Bank as well, as has the mid-cap index. But are your portfolios feeling that or not? Let's get in our market master today. We do have with us Pankaj Tibrewal of Ikigai, founder and CIO at Ikigai Asset Manager. Pankaj, always a pleasure speaking with you. It's one of those, ticking the box sort of record highs where, yes, the markets hit that, but, portfolios aren't feeling the same. The street is worried about earnings returning. The street is worried about growth returning. The street is worried about FIIs returning. And it's worried a little about the uncertainty around trade as well. Amidst all of this, where do you think one should actually invest to make their portfolios feel like they're at a record high?
Good afternoon. I think your observation is absolutely right. So let's look at the data. So if you look at Nifty, which is almost at record highs, but if you look at the median constituent of Nifty, it's down by about 8%. Similarly, if you look at the small cap index, it's about 8% away from its all-time high. But the median constituent of small cap index is on an average down by 21%. And if you look at the BSE 500, the median constituent is down by about 18%. So very few handful stocks have taken the index higher, but the breadth of the market has been extremely narrow and poor. And we have seen this in the previous cycles also, that sometimes the index is driven by few names and few stocks, but the breadth has been extremely poor. Now, what can change this? I think finally stocks are slave of earnings and flows. And when we look at earnings this quarter, I think it was a little better than expected. After many quarters, we saw an upgrade cycle rather than a downgrade cycle on an aggregate basis. And let's, Mangalam, decode the entire earnings space. So 500 companies reported earnings growth of 15%. And if I bifurcate into BFSI and non-BFSI, BFSI is about 92 companies, earnings growth of 7%. And non-BFSI, which is bulk of 408 companies, is about 21% earnings growth. Now look at the market cap earnings growth. The large caps delivered 9%, mid caps delivered 31%, and small caps after a long time delivered 35%. But a caveat there is that both in mid and small caps, a decent portion is driven by oil and gas companies. For example, in mid cap, it was HPCL. In small caps, it was Cochin Refinery, maybe MRPL and stuff like that, where we need to adjust for that. But even after adjusting, the earnings growth was quite healthy for mid and small cap space. So I think once there is more consistency for a couple of quarters, I think you could see the breadth also reviving back. But obviously, as you rightly said, market all-time highs, but portfolio of individual investors not showing that.
Okay. But Pankaj, if you had to just narrow down on maybe a couple of pockets that you like within the market at this point, within the mid-cap space especially, what would they be?
So one space where we have been positive is the auto ancillary space. I think the auto cycle after a long time seems to be reviving back. The ground feedback continues to be positive. Even after the festive season, the momentum on four-wheeler, two-wheeler, and even commercial vehicles have started to be quite positive. That's the feedback we are getting from the ground. And after a long time, auto ancillary seems to be in a sweet spot in the mid and small cap space, and especially the companies which are also pivoting themselves away from auto to non-auto. And there are many companies where the next 3-year outlook on non-auto, which is defense, aerospace, semiconductors, and maybe industrials, is shaping up to be very good because a lot of global suppliers are looking for manufacturing on precision engineering, and many of them fit the bill. So that's a space which we like. The second is the NBFC and the banking space. I think the NIM compression and the worst asset quality is behind us, and that's clearly being shown in large cap, mid cap banks right now. Earnings growth from here on should be quite strong for the banking space overall. And if you look at the lending, which is non-NBFC as well. But in non-NBFC, we have seen a sharp run-up already happen. So we need to be careful on valuations. But that's a space which can show you strong earnings growth. The third space where it's a contrarian call, I think, is metals and mining. I think you have seen a very strong quarter last quarter. But going forward also, I think that space globally is looking to be quite good. And you have seen a very sharp jump in copper, followed by zinc and other metals. I think that should reflect in the overall stock prices as you move ahead over the next few quarters.
All right,
So
auto
these are few
ancillaries.
topics.
Got that. Auto ancillaries, you like NBFCs, banks rather, and also the metal space, which is a contra call. So we'll, take these on board and wish that earnings do actually come back with a vengeance in the second half of this year, and then perhaps get you more on the consumption space and maybe a word on the IPO space as well, as more IPOs. Nearly 30,000 crore worth paper is likely to be supplied in December. With that, we'll take a short break, and as we do that, a quick programming note. Thank you, Pankaj, for joining in. If you're looking for big bets and market themes for 2026 as we move towards the start of the new year, CNBC TV18 Access gives you direct access, as the name suggests, to White Oak Capital AMC's Ashish Somaya and Prashant Kemkar as they share their winning market themes and actionable investment strategies. You can ask your questions live on 28th of November, that's tomorrow, at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans.